There's no plan B. Welcome everybody. In this video, we'll talk about NIO's path towards profitability, an update based on the earnings call, and yeah, what else is out there. So a couple of things that I'm talking through, maybe starting here with my Patreon community. And yeah, I see the sentiment has shifted. It's been very brutal, especially after the earnings call. I think that has a lot to do with the guidance that NIO scrapped and, dialed it down towards 120K minimum, maybe a bit more. And then the November sales also came in, right? So, but this morning, Alan here in my community posted a note from Deutsche Bank, and they say NIO is likely to achieve the non-GAAP profit in 4Q. So here the question is, what's going to happen? How realistic is it? And how could it look like? In fact, this is interesting to get such kind of a statement by Li Bin directly. If you are a follower of this channel, you've seen me talking about play A versus plan B scenario for quite some time. So I don't think he's actually watching my videos in order to respond in such a way and saying there is no plan B scenario. But the focus becomes clear, profitability, and I want to just highlight again that he has reiterated this during the earnings call. So despite that the guidance has been dialed down back to 120K, they're still trying to achieve the Q4 profitability or break-even metric. Now, what is interesting is, and I'll put this one out here on X a while ago, is about the delivery numbers and how, well, we need to, first of all, see the facts are that NIO is doing quite well this year, right? We are in an uptrend channel when it comes to the delivery. So this is the channel in blue. The lower line here is basically where NIO deliveries have been on the lower side of that channel and scale, whereas on the upside on the higher side, this is where it usually wouldn't break out of this uptrend channel, right? So in technical terms, that's showing us that NIO is increasing its sales, and the November deliveries have come in rather on the lower side of this channel. But I've put out this tweet on November 26th, so this has actually been before the actual numbers came in, and I actually thought that it would go a bit on the lower side in the November numbers, basically because we already had 40K in October, and meaning that they want to go to 120, guiding on the full quarter, that would only leave them with a 40K average, and usually December is the strongest month, whether or not there is an impact by subsidies, cutbacks, and trade-in cutbacks, and that sort of thing. Still, it's to be expected that December usually is a bit on the higher side than the rest of the quarters. So I was expecting that November comes in lower and December likely to be higher. And now we need more than 40K in December, and of course that is a little bit uncertain right now. But what is with certainty, right? So speaking of explaining this chart a little bit further, what you see in red here in comparison to NIO here is Tesla sales in mainland China, and you can see that they have made consistently lower lows, and especially in October the numbers have been really really bad. So usually the first month of a quarter for Tesla is focused on exports to overseas markets, and I think maybe that's also a way why NIO sales have been very high in October. So now coming to what this chart can tell us about the future, Tesla has been extremely bad, by the way, is in this consistent downtrend where the highs are getting lower and lower over time. It's not breaking out of here, and the lows are getting lower and lower. So they're not doing that well in China currently. In fact, Tesla has no growth currently in the main business, in the automotive business, compared to NIO. So that in itself is something to be aware of. I'm not sure how many people are aware of, actually, given the sentiment and some of the commentary out there. But I just wanted to highlight this in a chart. But what I also see happening based on this chart is actually that Tesla will bounce back strongly in the November and the December data. So I think this has been the low. I think they will now focus back on domestic, and I think this is partly pressuring NIO and maybe the Onvo brand in some of their sales, additionally to the topic of the cutbacks of incentives and trade-ins and that sort of stuff. So we need to be aware of the fact that NIO has been very, very let's say, outgoing and loud about their goal of achieving profitability in Q4. So that's, of course, in order to get the team behind it, in order to rally it, in order to make it investors look forward to it. But the competition is also looking at that and are thinking and saying, like, how can we interfere with that? Because NIO is a strong competitor and we would like them to see them go out of business, right? So we can assume that there have been strategies put in place for the likes of Tesla and others to really make NIO stumble and fall in the Q4 quarter and not achieve those headlines of profitability. Now we got this new analyst chiming in here from Deutsche Bank, and by the way, I'm not a huge fan of those bank analysts, but we need to be aware of the fact that they have had some very good commentary, I think, or questions during the earnings call. So let's look at this one. They think NIO will achieve the aim of the non-GAAP profit in the fourth quarter based on a cut in R&D and the higher mix of higher margin vehicles in Q4, leading to an 18% vehicle margin. So with that, they think that even based on those lower guidance, NIO can get to the plan of profitability. Now, I think, or I thought like that a while ago. Here are my Q4 estimates. I've updated them a little bit now, so I keep on changing them a little bit, but I've always, as you know, on this channel, I've always said, well, my prediction is 128K for the full quarter. I said this while we still were at 150K by official management guidance, but I never bought into that anyway, so I wasn't too surprised by the lower guidance here, but I don't know, now it looks that they might even come in lower than my personal expectations, which was quite conservative to begin with, but is still closer to what initially was said. And based on that, I did my Q4 estimates here, and I think I had a little bit higher sales margin estimates. I think closer to 20%. That might be too optimistic, but I now put in the 18% by Deutsche Bank in there and put very low R&D expenses in here, which come in lower than what we've seen delivered in the Q3. So 310 million. I'm not sure whether or not they can achieve that, but that's the assumption in the Deutsche Bank analyst note here. I think it could happen. I don't know how realistic it is though. And then here I have very, very low and good numbers in that sense for SG&A in terms of 500 millions only spent in a very good quarter, which could actually happen. I think we're now slightly higher than that. But now that they're also not thinking of scaling even higher and higher, that also doesn't put more pressure on SG&A, let's put it like that. Usually SG&A gets also higher the more vehicles they sell. That's why I'm always tracking this metric here, which by the way is not updated to the last quarter for the SG&A per vehicle sold. That one is trending down. That's the operational leverage which they need to unlock. And they have been quite successful in the last couple of quarters with this. But yeah, based on that, the 500 mil are super, super ambitious. But if that's going to happen, I think based on these numbers, that's a realistic break even. So this is the theoretical potential here where I think NIO management is still aiming for with the new guidance, and it's possible on a theoretical side. And we now have an analyst from Deutsche Bank exactly repeating the scenario, while I think most analysts, and especially the retail investors, and even in my Patreon community, which is long-term NIO investors, are becoming disappointed, more bearish, and the sentiment has really shifted to the negative side. But again, together with the commentary by Li Bin here, there is no plan B. What I initially described as the plan B scenario, that NIO could sell off some of their assets or venture them out and stuff like that. which I said might be an uncertain scenario. This could happen in case that NIO doesn't achieve profitability. NIO says no plan for plan B. We don't do such alternative scenario. So therefore, it's plan A, going to profitability. What if plan A isn't achieved? Then I think we go with something like a 100 mil to 200 mil net loss, which would be still a incredible result coming from 1 billion in quarterly losses, right? Or close to 1 billion, down to 100 mil, 200 mil. And the outcome of that is that it will extend NIO's runway significantly with now, and that was one of the surprises of the quarterly call, or the earnings, more than 5 billion in cash and free positive cash flows. So if that were the case, it's not profitability, but it would be a significant improved balance sheet or significant less strain on the cash resources of NIO. So not making another cash raise immediate. And to be frank, while this scenario is indeed possible still, and now analysts coming in and seeing it too, I do think it's, everything needs to go perfect. Like, as I said, with the competitors also looking to try and stop NIO here, it may not be achieved, especially not if the consumers have already bought all of their cars with the incentives and are not looking to buy more in December. This could happen. In that case, we could not break even, that's true, but still would, in my opinion, be a plan A scenario in which we could continue and see further out into the future of NIO. And then obviously everything depends on 2026, which I think on the macros will be a big year in terms of announcements from NIO's side, where they can finally reinvent themselves. But it's not getting easier on the fundamental side to break even, despite the other target for 2026, which is set to have full year profitability, which only then is going to happen if deliveries can start growing, or not start growing, continue growing. Again, I want to highlight that on the fundamental side, on the growth trajectory, NIO is doing considerably well right now, also in comparison to, for example, the auto, and especially to Tesla in China. They could match, like if these trends continue, like Tesla in the downtrend and NIO in the uptrend, NIO could come very, very close or match Tesla's China domestic deliveries. So, I know there is lots of negativity out there and things to see that are bad, but I would like also to highlight some of these bright spots here and discuss it with you, what I find realistic or not. So I think maybe if you want to nail me down towards profitability probabilities, I would say that it's more likely to not get to a break even, but it is possible. I would maybe give it a more than 60% likelihood that it's not going to be profitable, but very close, and 40% or less, a little bit less, that they actually make it through to profitability based on these metrics shown here. That's my takeaway for now. And let me know in the comments what you think about it. Thanks for watching.